there is a cycle which is continuously occurring across all of our markets. Now this cycle is known as accumulation and distribution. This cycle has 4 basic parts. In this example, we have part 1, which is the movement down, as we can see, followed by part 2, our accumulation zone. Once accumulation has ended, we have part 3, the move up. Once we reach our target, we go into distribution, which is part 4. Now if you look closely, following this cycle, the very same cycle repeats itself again, where we have part 1, which is the movement down, which leads into a new accumulation zone, followed by a movement up, followed by a super quick distribution zone, and then we get the movement down. And the very same cycle continuously repeats itself time after time. Now this is due to the fact that accumulation and distribution are targets of each other. So if you are able to correctly identify these cycles, you will be able to begin to make sense of how our charts unfold, and thus help you to make better trading decisions. Okay, so let's now dissect accumulation and distribution even further. Now, accumulation and distribution are often wrongly identified as sideways price action. And with this, people see this sideways price action and they come to this conclusion that the market is in a moment of indecision where it doesn't know what direction to head in. Now this is not the case, okay? So just to make this clear, the market never moves sideways and the market always knows which direction it wants to head in. It's just that these people they do not have the level of understanding to know that actually within inside of this accumulation zone here, we will have a fractal cycle. So this very same cycle which exists on this daily time frame, on a lower time frame, will exist inside of here. So if we go to the 12-hour time frame and we quickly scroll back into our example, you will actually find this very same cycle existing, and actually it ends up creating the larger cycle. So before the larger event occurs, so before this larger accumulation cycle can exist, actually on a smaller time frame, which we're on the 12-hour time frame now, the very same cycle exists where we have the movement down, we have an accumulation inside of accumulations, we have fractal nature on our charts, then we have the move up, followed by distribution, and again it repeats right up until the point where part 3 occurs on the larger time frame. So actually, there isn't this sideways price action, there is still this movement up and down, and this then gives you the ability to be able to buy and sell, buy and sell, buy and sell, and actually give you more trades. So being able to identify this across all time frames is very important and will actually allow you to take more trades and thus take more profits, because you will be able to compound your profits. This is often known as scalp trading. Okay, so now you may ask, well, what actually offsets accumulation and distribution? Now this is in the form of levels and other concepts, but these levels are known as support and resistance, and we will be looking at support and resistance amongst the other concepts as we progress through these lessons.